So you're thinking of getting into trading, or you're already in trading and you're not quite making it. You're not quite doing exactly what you expected to do. I'm going to show you today a system, the price action system, the system that's going to help you with your trading, the system that I've showed to so many people already that actually helps them manage their trades, actually helps them get forward with their trading. But it's not the system that makes you money. It's not a win rate that makes you money. It's not a chart that makes you money, because charts don't have predictive capability, and neither do you. You need a strategy. You need a business plan in the market. So after we've been to the chart and I've showed you on a system how you can chart and how you can make money with a chart, then I'm going to show you how to actually make money with the business plan and the strategy. Even though I've showed it to everyone over and over and over again, I keep having to show it again because nobody believes me. Nobody believes that the market's actually 50-50. Nobody actually believes me when I tell them that a win rate can't make you money. Nobody believes me when I tell them that the system is only there to manage a trade and to take a trade. It's not there for you to make money with. Win rates can't make you money. Why do you think a win rate makes you money? You think a win rate makes you money because you went on some course and they said, I'm going to give you this win rate. You're going to win 7 trades out of 10 and you're going to make money. And that's easy to do if you're scalping. If I take 7 trades and I make $10 on every trade, and then on the 8th trade, I lose $1,000. Am I winning or am I losing? Answer that question. It's quite simple, really, guys. At the end of the day, I'm losing. And I've got a win rate because I've won 7 of my 8 trades, which makes me quite a good trade. No, it doesn't, because I actually lost on the 8th trade. You've got to work this out for yourself, guys. You've got to figure out that charts don't make you money. Every single system known to mankind out there on the markets works. Every single system, all the charting systems work because some genius backtested them. Someone made it work. Not everybody can win in the markets because 70% of traders lose. Why do 70% of traders lose swing trading if every single system works? You've got to ask yourself this question, guys. And it's because people don't have a business plan, people don't have a strategy in the markets, and they don't realize that it's all in the mind, it's all in the psychology, and it's all in the fear. It's all in the FOMO, the fear of missing out, the impatience, the inability to sit on your hands and wait for trades to come to you. Guys, for those of you who don't know me, I'm Rob. For those of you who do know me, I am still Rob. Nothing's changed, and it's Coffee with Rob. And today I'm going to take you to the charts, and I'm going to show you a little bit on how you can trade with price action, how you can choose your trades, where you can take your trades, and how you can take your trades. Let's go and have the chart, look at the charts right now, and then after the charts, I'll take you and we'll talk a little bit more about the business plan and the strategy. Here's the charts, guys. So here we are on the chart. Lovely little charts. There we go. Look at that. Now you've got a chart to look at. And you only have to decide on this chart, where am I going to take a trade? Am I going to go up? Am I going to go down? Do you know that I actually have a subscriber that chooses to take a trade based on a coin flip? Effectively, you can toss a coin. If it lands on heads, I'll go long. If it goes on tails, I'll go short. And then he manages the trade. Because that's what trading is all about. It's all about how you manage the trade. It's not about taking the trade. Because how do you know which way this is going to go? But what we do is we make ourselves feel more comfortable with a little bit of a system, in place. Now, what I would normally do over time is I would take this to the day chart, take my daily levels, and then take it back to the 4-hour and take my levels on the 4-hour. So let's do that. Let's take it to the day chart before we do anything else. So we put it on the day chart. Let's take some levels from the day chart and see what we've got here, because now you can see what the day chart is doing, how it looks, if it's bullish, if it's bearish, or what's happening on this particular product. Now what I'm going to do is I'm actually going to take it and put it on a line chart. Why do I put it on a line chart? Because on a line chart, you get closing prices, and closing prices give you a more accurate reading of the market. Where's the level on this actually? Well, what I would normally do as well is I would draw a block in, which gives me more of a wider aspect as to the trade. And that's kind of where your level is on this particular product. That's your resistance level. That's the top level. That's the resistance. That's the resistance you're looking for. Where's the level at the bottom? We can draw one in at the bottom as well. And there is a level here. And you can actually take it all the way from there if you want to. Draw it along there. And that's your support level. So those are your daily levels. And I could draw the trend in here and everything as well, but we don't want to do that. What I'm going to do is take it back to candles. Once it's back on candles, I'm going to take it back to the 4-hour. You can see you're in a range here. That's your range on the daily. But yeah, when you're on a 4-hour, it's going to look slightly different. So put it back on the 4-hour. Make it nice and big again. Now here we are, trading on the 4-hour. So all you've done here is you've given yourself a daily resistance level and a daily support level. Now you know what range is trading in between on a daily basis. But you want to trade on the 4-hour, and you can do this on the 1-hour if you want. as well, doesn't matter. What I would look at here is, because we trade three ways. We trade three ways. We trade with a trend, we trade in a range. A range is between these two levels, and we counter trade. In other words, break of structure. Now, if you're in a range, you want to use break of structure to tell you which way you're going. So an easy way to look at break of structure is you could take it from the bottom here all the way to the top and break through there. But no, I've got 4-hour levels here to look at. So what I'm going to do, I'm going to draw the 4-hour levels in just to give myself a little bit of comfort. I do have a higher level there, and I've got a level here, and I think that's the prior high. So I'm going to use that level right there as the prior high. If it breaks through that, then it's giving me my next level and it's going up. So I'm going to keep that level in there and say, that's my prior high. That's my level that I want to work with. Breaks past that, I've got a long trade. I could go all the way to the top because this one is so close to the main resistance that we'll use that as a main resistance level. But on the 4-hour, we've got that level there. And then at the bottom, we've got a support level, and the support level would be over there. And I'm going to make that red because it's at the bottom. So that's your bottom level. Don't draw too many lines in on the charts. Don't draw too many indicators in the charts because you're just going to confuse yourself. I've seen charts with line after line after line after line after line, and you just don't know where to start or where to look. So keep it simple, keep it easy, and keep it, just 1 or 2 lines. That's all you need. But I am going to draw one extra line in here, and that is a trend line, because a trend line is really important. And I'm not going to take it from the bottom here on the daily. I'm just going to do the 4-hour one and just have a look here quickly, because I'm looking for a break of structure within that range. I'm not looking for the break of structure within the main range. I could be waiting for that, but at the moment I'm just waiting for a break of structure in this narrow range that I'm dealing with on the 4-hour. So I've got a range here on the 4-hour that I'm dealing with. On the inside here, there's a main range between the two, but on this internal range, I'm looking to see if it breaks that structure. And guess what? It's breaking that structure. So what I'm waiting for on this break of structure is a solid red candle here saying to me, we are going to the downside. And if we are going to the downside, we're going to take a trade here at this level. And there's another level right here, which maybe you didn't see, but you see there's a level there, there's a level there, there's a level there. So that's another support level that you wanted to break through. So we want to take a level from there. So what I'm going to do is I'm going to draw a short position in, because we're going to be taking a short position. Sorry, wrong one. Let's just go in here. Short position. I'm going to draw a short position in right there on that level. So there's the level. My risk is going to be above that line. My take profit is going to be on that line at the bottom. You could go all the way to the top and all the way to the bottom if you want to. That's fine. I will discuss how in a strategy you can make a profit with that in a little while. So that would be your trade. So what you're waiting for is a nice little red candle to go into that green sort of level there, confirming that this is a short trade, and then you would take that trade short on a break of structure. If it stays in structure, for example, it bounces off that support and it stays in structure, and you want to keep on trading with the trend, you can do that. Trading with the trend involves very much, I'm going to show you on particularly, say, the S&P 500 here. You see it keeps on going up, keeps on going up, keeps on going up. What is a trend at the end of the day? A trend at the end of the day is where it starts at the bottom, goes to the top, starts at the bottom, goes to the top, and it keeps on going up in that trend. That is trading in a trend. But when you're trying to pick a counter trade, then you're looking for it basically in that range. You're waiting for it to break that and go down. You do get bigger ones where it breaks the range completely and it's on its way down, for example, in that case. And then you've got a short trade on the bigger picture as well. You can look for those as well. Let's go and talk a little bit about the business plan. And then we'll probably come back and I'll show you how you can get into a trade where you can obviously take your trades from. Let's get away from the charts and let's just talk a little bit. Let's talk about the business plan. Let's talk about how you're going to make the money in the markets, because that's a price action system. That's a system that you can use, and you can go and take it, and you can go and make money in the markets with it. You can go and try and manage your trade with it. But what the charts are, the charts are there to help you feel more comfortable when you take a trade. When you're taking a trade, you don't want to feel uncomfortable about how you're taking your trade. You want to feel good about taking the trade. You want to know that when you're taking the trade, you're actually going to win. Because nobody gets into trading because they're going to lose. I don't know anyone who gets into trading because they're going to lose. Everybody thinks they're going to win. And if you don't have some kind of system in place that gives you the feeling that you're going to win, then you're just pie in the sky. In other words, if there's just a chart there and you're just flipping a coin like we talked about earlier and saying, I'm going to go long or short, then you're not really comfortable with that trade. You're thinking, but it could go either way. What I'm going to discuss with you now is how you can manage that. Most traders, and every single trader that I know on the planet, would rather have a charting system that's going to give them that confidence when they take the trade that they're going to go the right way with the trade, that it's not going to go against them in one way or another, that they're going to have some kind of win rate. Win rates don't make you money, but it's good to feel that you have a win rate. It's good to feel that you are winning more trades than you're losing, which unfortunately is not going to happen. Have I told you that you're going to lose more trades than you win? In fact, I always tell you the trades are 50-50 and you're going to win half and lose half, because it's like any kind of system. If you toss a coin, that's how it's going to go. But by the same token, you're probably going to lose more than you win. And you're going to say, but how am I going to make money if I'm going to lose more trades than I'm going to win? Because that doesn't make any sense to me at all. It doesn't give me any confidence that I'm going to make money if you're telling me I'm going to lose more trades than I'm going to win, because then I'm obviously going to be losing, aren't I? Well, not actually. Not if you do it right, and not if you have a plan. You see, if you were going to go and start a shop, a business down the road, you would have some kind of business plan. You'd have some kind of idea of what you want to go and do, wouldn't you? You wouldn't just go and open the shop. Firstly, you want to know how much capital you're going to need and how much money you're going to need and where that money is going to come from. Is it in the bank? Am I getting it from the bank? Is Joe Soap lending it to me? Where's it coming from? Then you want to know where the shop's going to be, how big it's going to be, what kind of stuff you're going to sell. Do you need staff? There's all kinds of questions you're going to ask yourself. Now, you don't need a 1,000-page business plan, but you do need some kind of plan. You do need some kind of idea of what you're going to do and how you're going to make money. Yet when you get into trading, you go on a course, the guy tells you you're going to have a win rate, and boof, you start trading just like that. And you don't have any idea how much money you're going to make. You don't have any idea how much money you're going to lose. You don't have any idea of anything. And this is one of the biggest issues in trading, is everybody thinks that just by having a chart and by having a few screens on the wall and having a little bit of terminology in the market, I know how to abbreviate this and I know what that's called and I know what that's called, that's somehow going to make you wealthy in the market. That's somehow going to turn $1,000 into $100,000. And I ask you this question: where in the world, where can you take $1,000 and turn it into $100,000 in 12 months? I doubt that you'll find anywhere. So all of you will say, trading, I'll do trading. I'll do leverage trading and I'll do that. Well, theoretically, it's possible, but practically, it doesn't work. And even the best have tried. It doesn't work. You can't get into trading with a tiny amount of capital and expect to turn it into $100,000, because there isn't an investment on the market that does that for you. And if there was, everyone would be doing it. Absolutely everyone, not just you, everyone would be involved in it, because that would leak out, everyone would know about it, and everyone would get involved in it. It just makes sense, doesn't it? You can't just take $1,000 and turn it into $100,000. It doesn't work like that. So you need a plan, you need a business plan, you need a strategy, and you need to treat this like a business, not like some kind of insane game that somebody told you can do this with. It doesn't work like that. If you don't have capital and you don't have money, it's not the end of the world, because they have invented a thing called prop firms and funded accounts, where you can actually go and get a funded account and you can get a share of the money you're making. And if you do make money off that account, you can collect it and eventually start your own cash account. Or at least you'll get the practice in the meantime while you build up the capital to start your own cash account. Funded accounts, I used to despise the damn things, but now I got no real big problem with them, because I actually do see them as a good link for people to get involved with, a way for you to get your psychology right. Because the biggest thing that holds you back in the trading is fear, your psychology, the FOMO, the patience. All of these things come into play, because when you're playing with real money, there's a big difference to when you're just on some kind of demo account on a course. You see, you go on the course and you think, oh, this is easy, I can do this. And when it comes to real money, then suddenly you start sweating and everything changes. But what is this business plan I talk about, and how do we work with this? Well, it's quite simple, really. What you do, the strategy is as follows. If you have a $25,000 account or a $100,000 account or $1 million account, it doesn't matter what size the account is, you've got to risk the same on every single trade. And what I do is I risk 1% on every single trade. Some people risk 2%, some people risk 5%, some people risk 0.5%. Depends on your threshold and how you feel. But the size doesn't really matter when you realize that you're going to make more on your wins than you are going to lose on your losses. So then that size gets negated. But the reason I don't risk 10% per trade is if I lose 10 of my trades, I lose the whole account. So I'm in the sense of if I am going to lose 10 trades in a row, it's a strange thing. It shouldn't happen. But just in case it does, let's make sure that that doesn't happen. And if I lose 10 trades in a row, I lose 10% of my account because I only risked 1% on every single account, every single trade. And if you want to change that, if you want to use a different amount, you can. The big thing here is also keep the account size the same. Don't let the account size grow or shrink. If it shrinks, change it consciously. If you want to change the account size that you're trading, make sure you consciously change the account size and say, this is no longer a $25,000 account. This is now a $30,000 or a $40,000 account. So I must change my risk factor on this account. The risk factor has to remain the same. There is no other way, because otherwise you won't make money. Now, the concept is this. If I have a $25,000 account, I'm going to risk $250 per trade. And then what I want to do is try and make more on the win than I am making on or losing on the loss, because it's a form of insanity to try and make $50 on a trade if I'm risking $250, because that just doesn't make sense, does it? How do I risk this $250 per trade? How do I get it to this point? Because clearly, how can I keep the risk the same on every single trade, because every single trade is different? Well, let me show you quickly how you take a trade when you're working with risk. Let's go to the charts again, and I'll show you that. Come on, let's go and have a look there. Right, so here we are on the chart again. Let's use the same one that we were using just a short while ago. So we're going to sell this, right? So you want to sell this. So what you would do is click sell, and then you would get this thing on the right here, which tells you, look, on most platforms, by the way, this one is a trading view type of platform. You've got MT5, you've got C-Trader, you've got all these different ones that you get. My MT5 is more complicated. We're not going to go into that right now. You do get, if you download from MQL5, you can get products that do this for you as well. But anyway, as it stands at the moment, if you have this type of software, most accounts do have this type of software, then you can simply click on the stop loss, and this is just the easy way to work it out. So you don't have to do maths, but you can do it with maths as well. You want to lose a maximum of $250. Now, the first thing that you've got to do is say, well, I want to take this trade at this level, but I want to put my stop loss in an invalidation area, not just close, not just far, just an area where I know if the trade gets to that point, my trade is in all likelihood invalid, and I don't want to be in that trade anymore because I'm wasting my time with that trade. So I'd rather just let it go. Otherwise, you're just going to end up moving the stop loss away or trying to dollar cost average, which is a complete idiotic thing to do as well. So just do yourself a favor, say, look, this is where I want my stop loss. This is probably a good place to take the trade from. That's normally the case. What I would say is, if that's the area I want my stop loss, that area is at 1.391. So I'm going to put that in here as my stop loss for a sell, 1.391. Now, if I have a stop loss of 1.3391, because that's ridiculous, 1.391, which is over there, then I'm only losing $156. And I want to lose $250. Well, I don't want to lose $250, but I'm risking $250. So let's see if I make that 0.6, that makes it 300. So let's make it 0.5, $260. Now, it doesn't have to be exactly 250, guys. Don't get me wrong. It just has to be close, really close, because you want to work within that range. Now you want to know that you can make more profit. You click on the take profit side and you say, well, I want my profit at 1.372. So if I have my profit at 1.372, I'll be making $426.35 for a risk of $260. That's a fair trade. And then you sell it, and then you're in the trade, and then you leave it because it's swing trading. Let's go back and chat. So now you don't have to sit and watch those charts all day because it's swing trading. If you're day trading, 99% of day traders lose. That's going to be really difficult for you to work with. It's going to be an insanely difficult thing to do, day trading. And so many people lose at day trading that, yeah, it's because the information you get in any one candle is only valid for 5 minutes, and you're not going to get the same information you get from swing trading. Swing trading is that much easier, that much slower. You'll find a lot of older traders like myself tend to sway towards swing trading and trading on the day charts rather than trading on on 5-minute charts. When you trade on 5-minute charts, it's that much faster. You have to sit and watch the charts all day. There's a lot of guys that come in and assume that they're going to make $200 a day and work for 2 hours and then go home. And then they come in and they sit down and they trade, and guess what happens? They lose. Instead of winning, they actually lose. It's actually so much better to have a swing trade. You put the trade in place, you leave it there, you come back at a later stage, and you just see how your trade's doing. And if you want to manage it, you can. If you want to take the stop loss early, you can. But don't take profits early, guys. This is a big thing as well. You know, when you're sitting in a trade, let the trade run, follow the trade up, and let it run. When it gets to a couple $100 in profit, move your stop loss up behind it and just follow it up with a stop loss. When it gets to the $400 profit taking that you wanted to take, don't just take the profit. Move your stop loss right up behind it. If it comes back and takes out that stop loss, then you've made your profit anyway, and you've made targets, so you're perfectly happy. But if it keeps on going north, you make more money, and you follow it up with a stop loss. Don't just click out of trades. And when it's $50 in profit, don't go, ooh, I'm out of here, click out, and then off you go. That's as simple as it gets. That's as easy as trading gets. Guys, if you've watched the video this far, don't forget to subscribe. At least subscribe, and join us and keep on watching with us, and join us for the live shows on Tuesday and Thursday, where I give you lots more training on charts and everything else and all the other things that go on in the markets. And while you're here, join the members area. Join the members area, get trade of the day every day, get a few perks and what have you. That's always fun. And if you want like one of those funded accounts or anything like that, there are some in the description below for you guys. Guys, keep your feet on the ground, reach for the sky. I want to thank you for watching. Until the next video, don't forget to watch the last one, which goes over this in detail. Cheers, ciao, and bye.